Okay, and welcome back, students taking Math for Business and Finance and Math Applications, and we're looking at the Chapter 18 section, the theory of the chapter on inventory and overhead. And this will be the last video because it's going to just cover the inventory turnover and distribution of overhead. I'm just going to jump right to it. I'm not going to go back over any of the previous concepts. And these two concepts of inventory turnover and distribution of overhead are relatively simple. So inventory turnover, is exactly what the name implies. How many times do you turn over your inventory during a period of time? Over the course of a year, you want to be turning that inventory over more and more and more. So the higher the number, the more profit you're most likely making, the better that you're doing. Okay, that's one of the ratios. If you recall back in, I forget which chapter it was. I think it was like chapter 16, where all of the ratios were being presented. Your quick ratio, things like that. Your current ratio. It was mentioned that the inventory turnover ratio was going to be covered in this chapter, as you know, instead of in that chapter where what they were talking about analysis of your financial statements. I guess they put the inventory turnover ratio here because it had to do with inventory, and that's what's being covered in this chapter. So, it's a guide. It's one of the ratios you use to look at your inventory versus, an overall financial position of your business, right? So inventory turnover, again, basically it's how many times you can turn it over. And because when you have inventory, right, you have a cost for that inventory, and you have your retail, what you're selling it for. Okay, so when you're looking at inventory turnover, you have two ways of looking at it. Okay, you have your net sales, and you divide it by your average inventory at retail. Okay, you're talking about net sales at retail and your average inventory at retail. So you're comparing retail to retail. When we're looking at cost, we're looking at our cost of goods sold and our average inventory at cost. Okay, you're not if you're not mixing retail with cost, right? You're looking at either the retail side of it as an inventory turnover, or you're looking at the cost side of it as added. You're looking at the cost side of it. Okay. And it's relatively, like I said, relatively simple. You have net sales, your cost of goods sold, and then you have either the average inventory at retail or average inventory at cost. But for those who don't know what average inventory is, okay, average inventory is simply a calculation. All right, it's your beginning inventory plus your ending inventory, and you're dividing it by 2. Okay, and that gives you your average or the middle. Okay, so if you think of it, let's just, and that's the formula for average. That's how you average. Okay, so just to give a quick set of numbers so it sticks in your mind here. And this doesn't matter whether it's retail or cost. I can write $100,000 here and call that retail, and I can have that same $100,000 and call it cost. So it does, as long as you're working with just costs. Remember, if I have $100,000 in cost and I'm selling that for $500,000, that's retail. Okay, you're not mixing and matching. Okay, but if I'm just looking at cost, it doesn't matter what what the number is, as long as I'm using that as the cost. So, or if that number was retail, then fine, it's average inventory at retail. So I start out with a beginning inventory of 100,000, and I add the ending inventory, and let's call that 200,000. Okay, and I just divide it by 2. So that's 300,000 divided by 2, which means my average inventory is 150,000. Okay, so that's the average inventory, and that's how that's calculated. And it's calculated the same way whether it's at cost or it's at retail. And so then you're just taking whatever that average is and dividing it into net sales for retail, or dividing into the cost of goods sold at cost. And that gives you your inventory turnover as a ratio for you to be able to do analysis. All right. Again, the higher the turnover, the better you're doing. The lower the turnover, I mean, I don't want to say the worse you're doing, but you're not doing as well as you possibly could. All right. I mean, there are limits to what you can do, but that's all taken within the context of the business itself. Okay, so that's inventory turnover. And now we're going to talk about distribution of overhead. Okay, generally the distribution of overhead. All right, first of all, what's overhead? Overhead is things like your lighting, electricity, TRICITY, however you spell electricity, whatever. Okay, it's those things that are not directly related to the cost of the uh, the inventory. Right? Remember, let's say we can either make something or we can buy something. Okay, and that would be our cost. Okay. Now I'm going to use make because it's just easier to think about it in that perspective. So if I have a door and I have wood sitting here, okay, I have to bring the wood in, it gets cut up, right? Then it moves over to another department, and then that's assembled, right, into a table, let's say. Okay, and then it gets moved over, and then over here is your painting, and it gets painted and or finished, right? And then you end up with your completed table, right, which is called the finished good. And that finished good has a certain amount of costs, because why? Well, there was a cost for the wood, there was a cost for labor to cut it, there was a cost for labor to assemble it, okay, and then there's also indirect material costs. There's for like screws and the glue, okay, and then when it gets painted, there's labor for painting, and there's also the paint itself or the finish, so that there's also material cost there, right? So these all add up, and when it comes out the back end, you have this finished good for the table, and let's say that's $100, okay? But is that the actual cost of the table? No, because why? You had, like I said, electricity, you have lighting, there's other things that are involved that become a part of, the cost of the table. So all of those other things are called like your manufacturing overhead, okay? Manufacturing overhead. And so let's say that all totals up to $20, okay? You add that to that cost of $100 for the table, so now your true cost of the table is $120, and that is your cost of goods sold, okay? That will be put into inventory, right? That's the cost that ends up in inventory and becomes your cost of goods sold when you actually sell it, okay? So, but now here's the thing, how do you know how much, what to do with that overhead? I mean, after all, you're in this here warehouse and you have this great big building and you get one electric bill, you get one, water bill, the janitor, he gets paid an hourly wage to clean up everything, okay? And this department and that department, let's call, this cutting department, Department A, and this assembly department, Department B. And this painting department, Department C. Okay. Well, that guy, the guy who's going along and cleaning up, obviously there's going to be a lot more to clean up where he's cutting the wood, because there's a lot more sawdust all over the floor versus, in Department B in assembly, there's hardly anything to clean up there. Okay. And the same with over here at Department C. So how do you distribute his labor, between all three departments? Sure, the guy standing cutting, that's a direct labor to the table. The guy assembling it is a direct labor, and the guy painting is a direct labor. But the janitor, his is not direct. He comes back at the end of the day and he cleans up each area. So how do you know which one, how do you allocate his, wages, to each department? Okay. And that's what, take the distribution of overhead is about. You have all of these here additional overhead costs that are part of the final cost of the item produced. And you have to be able to distribute it in a certain way. You have to be able to distribute it accordingly. And that's what the calculations by floor space or calculations by sales comes in. Okay. And those are the two methods that are being shown here in the textbook, but obviously depending upon the business, there's a lot of other different ways that you can do this, but these are just two common ways to do it. Very, very simplistic, just to be able to give you an idea. Okay. And they both work exactly the same way, whether it's by floor space, and we'll call that square feet, or by sales, which we call dollar amounts, right? So to keep things simple, let's talk about square feet. If you have, and it says here, come up with a ratio and then multiply that by the overhead expense to be distributed. And I'm just going to make up some numbers here, and I'm not using the ones in the book. So let's say the amount that's of my overhead expense is 100,000. Okay, that's the overhead expense to be distributed. And if I have department, A and department B, okay, and let's say the square foot for department A is 60,000 square foot, let's say, and department B is 40,000 square foot. And I know these numbers are relatively easy to be able to just do the math as I'm talking, okay? But, the base is the same. I mean, even if I added a third one, we're talking about ratios here. You've seen this before earlier in the textbook, okay? None of the things that we're doing here are any different from what you've learned in previous chapters. What you've learned in previous chapters is just being applied to a different concept. So it's not like you're learning something new. Yeah, you're applying it against something different, but the same idea still remains the same. What am I doing? I'm taking and I'm creating a, percentage here. Remember back in the chapter when I had talked about, dollar amounts being the same as percentages? Okay, well, that's exactly what we're doing here. We're doing the same exact thing as we did back in that chapter. So we're creating a ratio, and in order to be able to create a ratio, we add these two together, which gives us 100,000. Okay, so what portion of this total of 100,000 is department A? Well, that's 60,000 divided by 100,000 being, and it ends up being 60%. Okay, so department A gets 60%. And department B is 40,000 divided by the 100,000, okay, which gives us 40%. So that's 40%. Okay, and the two total is 100,000. What am I talking about here? I'm talking about numbers here, right? Square feet. And I'm talking about percentages over here, which was no different than in the chapter where we had discussed amounts and percentages when we were discussing sales less gross profit, cost of goods sold giving us a gross profit. The same exact thinking, okay? So we end up with these percents here, for each department. And then we allocate those, the overhead amount, the 100,000, by taking and multiplying it by that percent. Now, I realize that if I have 100,000 times 60% is going to give me 60,000. Well, $60,000 of that $100,000 is $60,000, which goes against A, and 40,000 against B. Okay, and that's on a a very simple level. But you know what? Those numbers came out too easy, and it may make it a little confusing. So let me just do another quick example here. Okay, and I'm still going to call my overhead cost is 100,000, but for department A, let's say I'm talking about 30,000 square feet, and department B, I'm talking about 20,000 square feet. Okay, so that's 50,000 square feet total, right? And to get the percentage for A, I take 30,000 and divide it by 50. So 30 divided by 50, I end up with 60%. Okay. Well, obviously, the opposite of, since 50,000 is 100%, this would have to be 40%. Okay. But let me just throw a little monkey wrench in here. Let me do this. Okay, let's say B, department B is 15,000 and department C is 5,000. Okay, I still have the same 50,000, okay, as a total, right? So that means department A is 30,000 divided by 50,000 is 60%. Okay, and so that ends up being the 60% for department A. Now for department B, I have 15,000 divided by 50,000. So it's 15 divided by 50, and that gives me 30%. So department B gets 30%. And of course, I can add those two together, which is 90%, and subtract it from the 100%, which is what the 50,000 is, means that department C gets 10%. Okay, so to allocate the $100,000, all I'm taking is the 100,000 and multiplying it by those percentages. So department A ends up getting $60,000. Department B gets 30,000, and department C gets 10,000. Okay, because they all add up to $100,000, right? Notice I have percents here and dollars here. Okay, and these are square feet. So that's how you do the square feet, but the sales are exactly the calculations are the same, except we're talking about dollar amounts for sales instead of floor space. We're just distributing against a set metric that we've determined for our particular business. It doesn't have to be floor space, it doesn't have to be sales, it could be something else. Okay, but that all depends upon the business in itself, but the concept is still the same. You're taking and adding up all of the whatever the metric is, you're adding them all up and coming up with a percentage, and whatever percentage for those departments or sections or whatever you want to call it, remember, it's the same concept, just applied against a different thing, but it's the same thinking, the same process. I'm coming up with this percentage, and a percentage is nothing more than, comes from a ratio, and I'm multiplying it by my overhead expense to know how much to allocate to that particular department. Okay, so with that, I'm done with the theory for chapter 18, and in doing the homework problems, you'll keep this back in mind, because when you're doing the homework problems, again, it's a lot of math heavy, and you'll use the, you'll have the theory in your head, and if you do enough problems, the math will become kind of like redundant, and you might even have a tendency to forget what the theory is behind it, the concept behind it, because you're just doing so much math. But by doing the problems is the only way that, the repetition of it is the only way that you'll get a feel for exactly what that process is and what they actually mean. So if you have any questions, feel free to give us a call, and I will see you in the drill problems.